Hey guys, welcome back to Keys Green Tea, where the only tea we're interested in is the green kind. So guys, I have been MIA, and it's actually because me and my family and I, we relocated to a new residence. So between packing and unpacking, I was unable to keep up with the videos. But your girl is back, and I have news for you guys. So if you don't know, I have actually been taking a step back from stocks. And I've already explained why you take a step back. When you take a step back, this causes you to relax. This causes you to let your money fluctuate and do what it needs to do, because if you keep up with the stock market every day, unless you're a day trader or you're doing option trading, you're going to sell out of fear, and when you sell out of fear, you're going to end up missing out. So this is why I would recommend taking some time off. Luckily, I've been so busy moving and getting everything situated that I was actually able to stop watching. But today I did watch it, and Apple actually went down, guys. Not Apple, well, Apple did go down too. The whole stock market pretty much went down. And I think if you're new to stocks or you don't really understand stocks, you would freak out and you'd be like, what is happening to my money? And let me tell you, right now, stocks are on sale. It is not the time to sell, it is a time to buy. So if you have extra money laying around, this is your time to buy, guys. And here is how I'm actually going to do, how I'm going to start investing more into stocks this year. So your girl has made a promise to herself. I am not buying any clothes or shoes or bags this year, no purses, no type of accessories, because I do have more than enough. And I think a lot of times we as people, we feel like we don't have, or we have to keep buying, and we don't. And so all that money that I would use to probably go buy a bag, go buy some shoes, or a hat, sunglasses, or any of that, I'm actually going to take that money and invest it. So that is either going to be into Bitcoins or any one of the cryptos, or I'm going to invest it into a stock. And this is where my extra money is going to come. So I would recommend you guys to figure out where is your extra money located, because you do not want to put money that you're about to pay your bills with. You don't want to put money that you're going to need anytime soon, because when you do that, you start to panic. And you will, even if you don't panic, sometimes you'll start to sell your stuff just to have the money. And it kind of defeats the purpose of why you get into investing in the first place. Now, obviously, if you're only investing short term and you just needed the money to grow in, this amount or this percentage, then you're more than welcome to do that. I do want you to be alert though. The more you sell, so if you become a day trader, or you're making money, profit, and you're cashing out throughout the year, understand Uncle Sam is going to come and get you. So do not become a day trader or just sell stocks without understanding the risk of when you sell those stocks. Now, if you hold on to a stock for at least a year, there is a tax break, guys. So I'll come back to you with more details on that. But I do know when you hold a stock for at least a year, the penalties aren't as harsh. So we don't want to end up enjoying profit for, throughout the year, feeling like we did it, and then tax time comes and you realize you're not getting any tax money because you owe Uncle Sam. So be very careful when you're playing with tax. This is why I am also a long-term investor. So, and let me tell you what I did do though today. I did sell Tesla. Oh my gosh, I know. That is one of my long-term ones. But let me tell you why I sold Tesla, because I only had one share of Tesla. And it was, you know, I bought in at 472. It was at 472 when I bought one full share. So I was like, right now Tesla's going down. I didn't sell out of fear. I sold my Tesla share out of hope that it would go down a little bit further than what I paid for it, so I could buy back in and actually make more. And also, I want you to know I didn't have a full share of Tesla, because when my Tesla went up, so I bought in at 472, it went up to about like 8 something. I ended up selling $200 of that I forgot, it was to buy into another stock. So I sacrificed that one whole share. And because I sacrificed that one whole share, I only had like 0.7 of a fraction of a share in Tesla. So I wanted to get a whole share back to Tesla, or a bigger, make my fraction a little bit bigger if I could, because as you know, Tesla's sitting at 800. Your girl's not rich to sit there, and I want to make sure, my goal is to have at least 10 shares in all of my companies that I'm investing in. So Tesla was, I don't have that type of money, guys. Last time I checked, actually, I brought my laptop out, guys. So this time I'm not just throwing out random numbers at you. So I logged into my Robinhood account online, and let me tell you, it isn't like, the phone is very convenient to have, because you always have your phone on you. But if you're doing stocks, it is so much more better to have a laptop or a computer that you're logged in to track. It just makes it like, it makes it a lot more cleaner to look at, and you understand. So Tesla right now, it actually jumped after hours $19. It went down $15 in the daytime, and right now it's at $7.18. Now, what I wanted to do though, because when I cashed out, I was still at a profit in Tesla. So I didn't, I cashed out at about $550. So all I really wanted Tesla to do was go down to 500 or even 550, even if it was 590, so I could just complete my share that I had already messed up. I've seen people ask, if your stock costs about $10 and you put $10 in, you get one whole share. Now, if somehow that $10 becomes $100, now let's say that stock you bought for $10 is now worth $100, you just made a $90 profit. Now, some people ask, well, can I take the profit and just leave the $10 there? Yes, you can, but you will not have a whole share anymore. So your profit is there, but if you take even $10 out of that, you're no longer going to have one whole share. You're going to have a fraction of a share now. So this is important to understand. I didn't know that. So when I first got into the stock business, when I seen a profit, I took the profit off, because I was like, okay, well, I paid this much for this, and it gave me this profit, so I actually would cut it out, and I realized it actually decreased my share. So just a heads up, guys, if you happen to put $10, $100, whatever, into a whole share of what it costs, understand your profit is there. You're more than welcome to take from that profit, but that $10, $100, whatever it was that you started with, that it doesn't stay the same. And like I said, when I say that, it just means you bought this share for $10, you made an extra $90, you took only $10 out, you no longer have one whole share. So just keep that in mind when you're also selling and buying your stocks. Let's see, what else can I talk to you guys about today? So let's look into Apple, because you guys know I like to talk about my long-term shares that I'm messing with. So Apple went down 14 cents today, and after hours they went down 56. That's fine. This month was not their month, but this month wasn't a lot of stocks month. Most of the stock market has been falling. So like I said, this is not time to panic sell. This is your stocks on sale, guys. So I've seen a comment on Facebook and I thought it was a perfect comment. They're like, okay, so a lot of people are freaking out because they see stocks went down. Now, if you buy a car or a purse or anything, and just because you see the price for that purse is normally $900 or that car is $27K, and all of a sudden there's a sale going on and now that car is only like $10K, or the purse is now at $500, does this mean you're going to turn around and say it's not worth buying? No, this means you're going to get more excited and now you're going to go out there and buy it because it's on sale. That is with stocks. So when the stock market that is down, it is not the time to like freak out. It is the time to say those shares that were too expensive for you to buy in on the regular is now more available or accessible. So definitely take advantage of when there is a dip, when there is when there's opportunity, and opportunity in the stock market is unfortunately when money is being lost. So your other opportunity obviously is cashing out on your profits, but if you're not ready to cash out and you're still trying to stick in there a little bit longer for investing, then definitely take advantage of the low fees right now for most of the shares that have taken a hit. I know a lot of people, you know, if you want, Apple share is almost basically the same price that it was when they split. It's currently at $125. So, you know, Friday comes, I am hoping it actually goes down a little bit more. And let me tell you guys, I've got 8 shares in Apple. So I don't want it to go down, but I do want it to go down this week so I can buy more shares. Let's see, what other stock can we look at? Now, I also invest in Twitter, and Twitter was actually up. Let me see what after hours looking like. So Twitter is actually still doing good. It went up $2.68 today, and it went up 63 cents after hour. Twitter, I have about 3 shares in Twitter. Like I said, I'm working to get at least 10 shares in each of my companies that I'm investing in. So I'm happy right now. Twitter is making me some money. I bought in around like $60. So right now it's sitting at $73. So yeah, definitely excited about that. Let's see, what other ones can we look at? Now, I've been holding on to Zomdica. So this is actually a hype stock. I think it was a hype stock. At least it was Facebook hype. And I actually bought 23 shares of Zomdica, guys. And right now they are down 21 cents. For today, and they're up 6 cents after market. They are, let's see, am I in the negative here? Let me just double check, guys. I like to check to see where I'm sitting at. So I am still in the positive. My total return is about $2.50. Not much, but they are a penny stock, guys. They're not like a big, you know, $30, $40, $50 stock. They're real cheap to buy in. So I'm just sitting here waiting because according to research, March, they're supposed to be coming out with some kind of product to help animal lovers, cats and dogs specifically. It's supposed to help the vets be able to diagnose them a lot faster. So we're going to see what happens. If not, I'm probably just going to end up cashing out and putting that money into Twitter, because that will buy me pretty much another share in Twitter. So we'll see where that goes. What other stocks we've got here? Nikola, guys. So Nikola came out with good news today. So they're still at a negative. But guys, they're my underdog stocks that I love, and I know they cost me a lot of money, but I have faith in them, and I'm actually thinking of putting because currently I'm at 8 shares with them as well, and I'm thinking about just finishing off at 10, even though they are not seeing that good of a week. They were down $1 for the week, $1.93. And let's see. I just want to give you an example, guys, of how they crashed. So when I bought into them when they were, let's see, it was around August. So I bought into them when they were about $30. It was 30. No, it was 40. It was $40 when I bought into them. And like I said, I have 8 shares into Nikola. It may not sound like a lot, guys, but like I said, I am not a rich person, so I definitely, when I seen them crash down, right now they're currently sitting at $19, which, is good for me because I see them coming up, but right now they're definitely struggling to climb, but I have faith in them, and I think I'm going to risk going ahead and put in an extra $40 so I can have my complete 10 shares with them. Because like I said, if you're also, what I want to tell you guys, if you're buying into stocks, it is best to have as many shares as possible. You do want to make your portfolio diverse, but you don't want to have just a bunch of one shares, because you don't really see a profit that way. So unless you bought in for like little or nothing, and like Tesla I bought for 4 and then it went up to almost 900. That was definitely a big profit, but imagine if I had 10 shares of Tesla. That would have been an even better profit than just about $400. So just to give you guys an example of why I say you want to make sure you have as many shares. Also, another rule of thumb to look at, even though you want to make it diverse, you don't want to spread yourself thin. Kind of think of it as being a mom or a dad with kids. Is it easier to keep track of like 3 kids compared to having 10 kids? So you want to make sure, even though you want to make it diverse, you don't want to have so many different stock options that you're even forgetting that, what you have money invested in. So just be mindful when you're making a diverse profile that you don't want to spread yourself so thin that you're forgetting what you did. It can work out in some sense, because if you do forget about a stock and you so happen to hold on to it and didn't sell it, and it shoots up behind your back without you noticing or freaking out and panic selling, awesome. But you just don't want to stress yourself by trying to look up each stock every second, seeing what they're doing, by having like 30 different stock options. So just keep it simple, stupid. Just one of that. Not calling you guys stupid, but I like to go with that method when I'm doing anything. I try to keep it as simple as possible so I'm not overworking myself. So just take a look into what you want to invest in. Learn about the company. If you're not sure, you can ask questions. You can follow groups. If you are on Clubhouse has some really educated people that you can listen to and get advice if you want. I am not a financial advisor. I just tell you what I do and what's working for me and what's not working for me, so you guys can pick and choose. But I do like to talk about stocks. I do like to educate people about stocks. I know a lot of people will say, well, why should I do this? Why would you not want to make money? It's pretty simple. Like, why would you not want to put your money somewhere that it has potential to grow? Like, you buy stuff or you put your money other places and your money is just gone and there's no benefits to it. It's kind of like paying rent, you know. A lot of people say, well, I want to be a homeowner because I don't want to keep throwing money away to build someone else's dream. You know, think about the stocks. It's like, it's a way to build onto your dream. Yes, you're kind of investing into a company and helping their dream, but they're helping you too, because you really don't have to do much other than just come up with the dough, put it in, and just let it sit. They're doing the work. They got to do the footwork to make sure that that company takes off. And it's easy for you in a sense because it's money that you're using that you don't really need. Not to say that you're going to throw it away, so you know you don't care if you get it back, but it's just money that you have available to invest in. Now, if you're not comfortable investing, guys, there are other ways that you can grow your money. Now, I'm not going to really get into details with it because my channel is really about stocks and crypto, but you can definitely put your money in a CD. In a CD, it doesn't grow as fast as a stock may, but you definitely will never have to worry about your money getting low, because with a CD, it only goes up. But if you're trying, like I said, if you're trying to invest and pay down on a house, pay off a mortgage, buy a car, put your kids in school, put yourself in school, whatever it is, just have retirement money, money for your kids later on. It's just anything that you're doing long term. I just feel like, yes, you can do multiple things, guys. You can get a CD and do stocks. That way, at least you know money is growing in one area and money has potential to blossom big in another area. Because you know what? We're all about investing. We're all about making the money grow. Also, if you can do a Roth IRA, guys, that's perfect, because you will not have to be taxed on that. So basically, you just have to put all of your profit into that. You can set it up with TD Ameritrade. That's actually why I downloaded that app, so I can work with them on that. So my stocks profit goes right there. I don't know if Robinhood has it. I haven't seen anything on Robinhood, but TD Ameritrade does offer that, and I'm sure some other apps may. I also downloaded Coinbase, guys. So I actually like Coinbase because now I get to buy more crypto that Robinhood did not have available, or Cash App, because Cash App only has Bitcoins and Robinhood has like Ethereum, Dogecoin, and Bitcoin Cash. So with Coinbase, you have a bigger selection of crypto to buy. So your girl is definitely putting some taxes on crypto, because look, crypto is my gamble, because I feel like crypto goes up even quicker than stocks. So I love me some crypto. That is probably like my addiction right there. But definitely be careful, because even though crypto can go up so fast, it goes down just as fast. So like I said, not a financial advisor. Do your research and figure out if that works for you, okay? But I'm going to go ahead and end this video here. I just wanted to come on, make a video, because I know I've been MIA. I appreciate your patience and your support, guys. So make sure you like, comment, and subscribe. Come back to Keys Green Tea, where the only tea we're interested in is the green kind. Woo!